No, they're a really strong set of numbers. Strong income growth, profits up, return on tangible equity 13.1%, and all supported by a very large capital return back to our shareholders.
In terms of the pressures, though, that are building up as well, you're the lady in charge of the purse strings as well. You're the one in charge of investment as well. Impairments. Did I see that they've gone up dramatically? First half, I beg your pardon, that's the profit before impairments. I beg your pardon. That is up 53.5% first half as well. Do you see, though, Katie, pressures building in the UK economy? I take it you do, given what Alison's saying on the front page of your results.
Look, we definitely see those pressures. We talk to our customer base and we can see that they're feeling their pressures, and we've put a lot of support in to kind of help them, whether it's things that we've done for the agricultural area or freezing fees for SMEs. But when I look at the actual impairments and the debts that we have on the balance sheet, they're in incredibly good shape. We've done a huge amount of work over the last number of years to make sure we've got the right balance of risk. Our customers over the last few years of COVID have built up very strong deposits. They increased by 14 billion as well over this half, and they're in a good shape. But what we all know is there's more things to come. So what we did in terms of that impairment number, it's actually a small release for the half, just about 50 million pounds. But we looked forward and said, right, we know energy prices are going up. We know people are feeling the pressure. What could be coming down the line? And we've put some away in technically what you call sort of post-model adjustments, but it's just a little bit of preparation for actually we expect some more pressure to come. And so there's about 600 million on the balance sheet to make sure we can be prepared for that when it comes. But today, if I look at the numbers today and we search hard, actually the facts and the numbers are not that people are feeling pressure. But when we talk to our customers, we know that they're worried and we know that they are trying to prepare. So when things do continue to get tougher, that they're ready.
How swift a decline, you've seen a few cycles like I have, Katie, as well, how swift a decline in the ability to service loans, the ability to pay bills, the ability to pay energy bills, which we know are, Martin Lewis, someone you know very well as well, is absolutely more terrified about than he's ever been as well. How swift could this decline be for the UK consumer, despite what you're saying about their personal balance sheet at the moment?
So I think what's really important for us is what's happening in terms of unemployment. So if you look at the unemployment levels, 3.8% are, as we rebase our economics, we see them going up a little bit, but not to a level that would be a particular concern. When you borrow for the bank, we assess you in terms of rising interest rates, far higher than they are today. We assess you for the impact of inflation over a multi-year period. And we can see that those people that we lend to as a prime bank, we're comfortable that they'll be able to maintain those payments. But I think it's really important that we make sure we service the whole community as well, not just our borrowers, which is why things like the hardship fund and the financial health checks, of which we've done 400,000 this year already with the customer base, is just really important to make sure that we're having the right conversations, because none of us have really lived through really high inflation for decades in reality. And if you're running a business or running a household, it's not something you've had to deal with.